One trade which is really doing well is IT. Infosys up 4%, Wipro up 3%, TechM up 2.5%, and TCS as well holding very, very strong. But all about earnings. So let me welcome on board now Amit Chadha, the MD and CEO at L&T Technology Services, and talk about how their earnings performance has been. Amit, hi, morning. Good to have you on ET now. Give us an understanding of how growth across geographies has panned out for you.
Well, if you look at it, we've grown at about 10% plus year on year. And that's been led, if I may, by sustainability, which grew double digit year on year yet again. Second, we saw some improvement in mobility trends, and tech, of course, has grown 5.5%. So that's been broadly as we've seen it. North America actually grew 15% plus year on year. Europe came in about 2% up year on year. So that's broadly been the contours of where we have been this quarter. Not just that, I would like to add that we've actually improved our EBIT margins to 14.6%, up 120 bips. And our gross margin is up 200 bips as we speak right now. As we look ahead, we're fairly comfortable and we do see this improving from here on further.
And EBIT, you've done well on margins. So talk to us about that. What's aided the margin number?
So two or three things have aided these margins. Number one, we've been able to improve our pyramid slightly. Number two, we have improved utilization. Number three, what's happened is we've been able to get some rate increases from some of our clients. And finally, what we've done is we've taken the non-strategic part of our portfolio and we have let that go in the current quarter. And that's what you see also. All these factors put together have helped us improve gross margin by 200 bips and EBIT margin by 120 bips. As I look forward into the future, I see that continuing. We would like to operate on EBIT margins that are more closer to 16.5% levels. And we are working to get there as soon as we can.
Right. So give us some color on the pace and timing of auto recovery.
If I look at mobility, we do believe that mobility has turned the corner. We see US auto picking up, has actually done okay this quarter, and going from there. And generally furloughs hit the auto sector pretty hard. So we've grown mobility in spite of furloughs, if you ask me. So as I look at next quarter and beyond, I do see improvements in margins. I see mobility turning around and growing further. Not just in the US, in Europe as well. I also see improvement in aerospace that I think has done well for us this quarter and will continue to expand. Trucks and off-highway, given the fact there are tariffs, etc., didn't do so well in the current quarter. And as I look forward, I do think it'll take a couple of quarters to rebound. So if I look at an overall mobility segment, I expect mobility to grow from here on as you look at, and the worst should be over.
And talk to us, Amit, about TCV to revenue conversion. How is that playing out for you? How is execution playing out?
So TCV to revenue conversion is fairly at the levels that we had expected. If I look at the last 2 quarters, our deal closures have been in the sustainability segment. And because they've been in the sustainability segment, we've been able to grow sustainability, if you look at it in this quarter, year on year and quarter on quarter. This quarter, we've closed mobility deals, more than $100 million of TCV mobility deals. So quarter 4, you will see mobility starting to grow. So we are able to, shall I say, convert to revenue a lot of these deals that we are signing. Of course, there are ramp-ups, etc., that happen over a period of time, but definitely sure-footed growth we've seen.
Right. And talk to us about the traction on ordering that you're currently seeing. What's the pipeline looking like?
Look, in fact, today, if I look at my my order backlog, or I look at my pipeline, our pipeline is up 20% year on year, right? And if I look at clients that are talking to us today, we continue to have conversations with them around various programs, transformation programs, a lot of AI work that we are picking up in physical AI, industrial AI from our clients. So we do see an upswing as we move forward.
Give us some color around attrition, talent retention. How are some of those challenges playing out for you?
So attrition for us was stable at 14.x. We expect it to be stable next quarter as well. Move forward, headcount has been fairly flat. Look, we have grown year on year without adding headcount, right? And we believe, and that's a result of that. The reason it's happened is because of all this AI implementation we have done internally in the company to improve processes, automation, utilization. I do see the next 2 quarters also being fairly flat in headcount, but we are taking freshers on. You will start seeing headcount starting to increase materially from Q2 of next year.
Right, Amit. Thanks so much for your time today. Good to be speaking with you.